Hello traders, welcome to part 2 of the market structure a step further series. In this part, we are going to be looking at validating our points of interest with respect to the concepts of strong highs versus weak lows and strong lows versus weak highs, and also that of liquidity inducements. In the schematic on the screen, it is clear that we are in an uptrend since price is breaking the highs constantly in form of break of structures. Now let's identify this. Let's assume that we have identified a point of interest here that led to the break of this structure. Okay. So after the break of the structure, we expect price to return to origin. And let's assume that price is already doing that, creating low, high, lower low, lower high, lower low, and eventually we have a minor change of character because this is an internal structure. So we have a minor change of character. This change of character is to induce buying here. Majority of persons, they want to buy here and expect that the price will react from some sort of point of interest here to take price up. That could be the target in terms of clearing this liquidity. So there's going to be liquidity below these lows, and that is why we can wait for this manipulative move to happen. When that happens, once again, some persons may begin to think there's a probability or possibility that this has now become what? The supply zone, and what we expect after the break of the structure, clearing this liquidity, we may expect price to come and react from this place, that point, and continue our bearish movement. But if that is not the case, and price eventually ended up breaking this high and also this weak high, then we can most likely validate this as our strong low. So we don't expect price to actually trade below that low. So that's one of the ways we can validate a strong low. So after this break of structure, once again, we identify the point of interest that led to the break of the structure, and we expect price to return to origin. In this case, price created what? An equal low. We already know that below the equal low rests liquidity. So we wait for this manipulative move, especially if it is not at our point of interest yet. So wait for this manipulative move, and when that happens and eventually led to the break of this weak high in form of break of structure, then once again we can validate this low as a strong low, meaning that we don't expect price to trade below this low. And once again we identify this point of interest. We have another scenario here, which is very likely like this. Which is more like this, okay? We have this low, high, low, and we have this what? Equal high here. Price came, cleared the liquidity, stop under this high, and break to the downside. This could clearly be seen as what? The supply zone. And we expect price once again to come to this zone here, and react from there to continue the down move. But if that is not the case, and this move that came to clear this liquidity below these lows, this equal low, now ended up breaking this supposedly strong high and even this weak high here, this overall weak high, then we can validate this as our strong low after this break of structure. once again we can identify this as the point of interest that led to the break of this high, and then we expect price to trade back to it in form of mitigation. And this is quite simple. Price is making low, high, lower low, lower high, lower low, lower high. And if price, eventually created this internal change of character here, and price eventually continue and break this weak high, then we can validate this as our strong low, not expecting price to trade below it. The same thing applies to the bearish version of it. Let me just clear these drawings. Let me clear the drawings. Okay. So the same thing applies to the bearish version of it. We have a break of structure sponsored by this point of interest. We have a mitigation of this move. Before price got to our point of interest, we have this change of character here, this minor change of character, just to induce selling. Okay, so we have to wait to see if price will go and clear the liquidity, the buy side liquidity, and that is exactly what happened. Tap into this point of interest and then break structure to the downside, this weak low. In this case, we're having strong highs and weak lows. Okay, after breaking this weak low, then we can validate the point of interest that is here as a strong high. So we have another situation where we created this equal high liquidity inducement, and price came. It can be trend line, can be anything. Price came, manipulated it, and eventually break this low. This can be taken as a strong high. Okay, so identify this point of interest once again, and we have this move that manipulated this low. If price eventually comes and break this move, we're supposed to be having this as a strong low in order for it to take price up. But if there is a what we call supply demand supply flip in this case, demand supply flip in this case, it means that this eventually, after breaking this low and breaking this weak low to form this break of structure, this could most likely become our strong high. Sorry for that delay. So it could most likely become our strong high. So identify this point of interest that led to this break of structure. Once again, we wait for a mitigation, and this is simply a change of character. And if this move ended up breaking this weak low, then we can refer to this as a strong high. We expect price to continue from there. Now this is just a schematic. It's not as easy as you are looking at it, but this is just the basic of what I really want to teach. What is there is that you need to understand the strong highs, the weak lows, the strong lows, and the weak highs, and then liquidity inducement and manipulation. So in all of the cases, we need to wait for manipulation before we can confidently say that this is a strong high or a strong low. And that's the strategy. It doesn't mean that price cannot do whatever it wants to do, but we need to stick to our strategy. So quickly, we are going to be moving to the week chart to just explain more. Now we are on the week charts. We are actually on GU, and we are in the 15 minutes time frame. On the 15 minutes time frame, obviously this is on-site. This is on-site. Just to make the video quick, I don't want to do long videos. We already have the point of interest marked, but I'm going to explain the thought process of what I'm actually looking at here. For example, we have this move. Price is actually the downtrend. We have this move clearing liquidity, and then we are focusing on this move, this particular move. Look at this move that clear liquidity. We are focusing on this particular move that clear liquidity. Clear this liquidity, And you can see that this is already a flip. It's already a flip. We expect that after this move, clear this liquidity here, and we have a break of the structure here, we expect price to continue. But then look at, we have large liquidity, large pool of liquidity lying above here, and that is exactly what this move, the intention of this move, to clear all this liquidity. And after clearing the liquidity, what happens? We have a break of structure here, so we can identify this as a strong high. Here we have this POI. We tap the POI, we can identify this as our strong high. This is a kind of weak POI, that is WICK. I'm talking of WICK, a way of identifying point of interest using the wicks. Okay, so we have that. And what do we notice here? After this break of structure, we can call this a strong high. We have the POI marked, and we can notice here also that after the break of structure, price was making high, low, higher high, higher low, higher high. And what do we have here? A minor change of character. This could have induced selling, okay, but price came, clearing liquidity. Price came further. After clearing liquidity, we discover that there's still some liquidity left to be cleared, and this is in form of approximately equal highs. Price now came using this move. You can see this move here, this entire move, okay, this entire move is a move that actually what? Clear this liquidity, but refine to this. Okay, how do we refine this? We simply take, if we have taken here because it's unsight, we wouldn't have been in the market. So another safe way to enter is to trade from this imbalance, this imbalance area, to trade from the start of the imbalance candle. Okay, so that's one of the safe way you can actually enter your trades. So that is what we did. And you can see that price actually came and reacted from there. So this is actually a strong high. Why? Because it eventually led to the what? Break of structure at the end of the day. It cleared liquidity and led to the break of structure. And you can see what price actually did. Came back once again, clearing all this liquidity. You can see all this liquidity, clearing all this liquidity here. All this liquidity, clear all this liquidity, and then price is not trading down with a very good move downwards. So that's all we really want to show here on how you can really validate your point of interest. I just hope that it has created some values. Thank you and happy trading.